Good morning and welcome to today's FS Club webinar on helping to unlock finance for SMEs in the race to zero with Gavin Starks, founder and CEO at Icebreaker One, which connects finance, industry and environmental data to help business deliver. During this webinar, Gavin will be briefing us on Perseus, a whole-of-market solution to create rapidly scalable, low-effort, low-friction sustainability reporting, with the goal of helping unlock access to capital by automating GHG reporting for every SME in the country. Perseus is backed by the UK government and has been included in this year's Green Finance Strategy. Gavin's work spans data infrastructure, policy, science, media, communications and innovation, including as co-chair of the Open Banking Standard, founding CEO of the Open Data Institute, advisor to the Financial Conduct Authority, and many more. He regularly provides strategic advice to governments, regulators, and intergovernmental organisations around the world. And Gavin's fun fact is he converted a century-old cargo ship to liveaboard and built a cooperative historic harbour on the Thames to put it on. Now, if we haven't met yet, virtually or in person, I'm Charlotte Dorber-Ashley and I manage the FS Club for ZM. I'd like to warmly acknowledge our very generous sponsors who enable us to continue to bring you a wide range of thought-provoking content across finance, technology and economics. As usual, the slides for this presentation are publicly available on our website and in the chat box. We'll record this session and it will be available to watch on our website within 48 hours. And we're holding a 20-minute Q&A session after Gavin's presentation. So please use the GoToWebinar chat facility to send your questions in to me, and then I'll feed them into the conversation. Now, without further ado, it's my pleasure to hand over to you, Gavin.
Thank you, Charlotte. Let me just share my screen here. There we go. So, welcome everyone. It's good to connect with you today. As you heard, my name is Gavin Starks. I'm the founder of Icebreaker One. We're an independent non-profit really focused on the data infrastructure behind net zero. But I wanted to start today with maybe a bit of an existential question about why we are here. And why we are here is due to this very, very thin layer of our upper atmosphere, which when you look at it from space, and my background is originally in astrophysics, is an incredibly fragile thing when you look at this at the scale. It'd probably take you about an hour if you're driving at speed to go from the bottom of it to the top of the bit that's important to us at this stage. And really the challenge that we're facing is that climate change is upon us. This is not a future challenge, it is a today challenge. And the theme of this talk very much is around the time for theory being over. We really must get on and act here. But I'm going to start from a point which may seem a little abstract, but will become hopefully clear as we go through this. I want to talk a little bit about data. I've spent most of my professional career working with data and science and business, and how we bring these different things together. And we've got this incredible thing that we've built over the last 40 years now called the web. And when you look at building data ecosystems, there's a huge economic return in those benefits. And we've seen this just from a core business case of connecting data, so enabling data ecosystems to exist and thrive. We can see huge returns. And we can also point at more than half the world's data is unused, it's dark data. So just from an investment case here, making more of our data is a really good idea. But the way that we tend to have done this in the past is we try and put it all in one place and put a kind of paywall on it. And that's really not the way that we need to solve a multidisciplinary challenge, because the challenge here is we've got to sustain over 8 billion people while hitting peak everything everywhere all at once. And that spans a whole range of different areas, from energy to waste to water and biodiversity crisis and so on. So we've got this massive set of systemic challenges. But fortunately, we've got some prior thinking here. And this is actually from Thinking Systems from Donella Meadows, believe it or not, way back in 1993, which is missing information flows are one of the most common causes of systems malfunction. And adding or restoring information can be as powerful and easier to do in many cases than rebuilding our physical infrastructure. So you'll see a theme here of how can we use what we've got more effectively and more efficiently? How can we connect it using the web? Obviously, when this quote was written, the web was only just in its infancy. And so the challenge then when we come and look at this, and we're in 2023, some considerable pace forward, there are now more people online than existed when I was born, and there's more machines online than people. So we've got this digital first world that we're already living in. And so it's very difficult to see when you're in the middle of an exponential change, because when you're looking at short term, it's not easy to see. When you look at long term, you think, oh, that was something that was changing very quickly. And what we try to do then in terms of change organizational behaviors, this is very much a core cultural change as well, is your organization thinking digitally, or is it thinking physically? And most organizations that we've worked with tend to be working very much in the physical world, and they're very early still, even though we're decades into the web revolution, they're still quite early in terms of digital thinking by default. And again, this idea of centralizing everything before we can do any work is prevalent across most organizations, when we need to think of it in a more decentralized and distributed way. So when we think about data, data is never about technology. For me, it's not the new oil. Many metaphors there that we definitely don't want, particularly when we're talking about climate change. But really, data unlocks business value, but critically, data increases in value the more it's connected. And that's, again, a theme I'm going to come back on throughout this. And when we look at where we are today in this kind of systems thinking world, we can't, the usual sort of trope, we can't manage what we don't measure, but we can't act on what we don't trust. And so bringing stability and trust to data sharing will enable the market to invest. And again, let's pick on some examples there. So open banking, which I was fortunate to co-chair the development of, really, for me, embodied the principles of the web in a regulatory instrument. And what it did there is it mandated that the banks must be interoperable. Not just technically interoperable, so you can exchange information between banks and between banks and application vendors like accounting packages and so on, but legally interoperable. So there's a liability transfer, there's data rights addressed, and there's all of the non-technical things addressed in that. And because we open source the standard, it's now been copied in over 80 countries. It's a $20 billion market, and there's hundreds of fintechs just in the UK using the standard now to share information. And so there's data portability and sharing at market-wide scale. It is secure and it is protected, and it protects the rights of all of the actors in the middle there. And the reason I mention that is it's a really good blueprint upon which to build. So when we look at the net zero data ecosystem, we've suddenly got this world where finance needs information, not just from the financial economy, but from the real economy. So my preamble there saying, well, look, we've got data everywhere coming at us from sensors, coming at us across the web of data, if you like. That data now needs to come into the financial sector in a way that we can trust. And I'd say there's a crisis of trust right now. We need information in from the energy sector, from the water sector, from transport, the built world. That needs to be modeled into everything from demand response to looking at risk modeling and exposure modeling, and looking at where our stranded assets are and so on. And if we can't trust the data in, how are we going to make financial decisions? And there's a kind of argument here as well. It's taken us many centuries to get to the point where there's a decent audit structure around finance. And that's just one type of data, just money. And that's taken us a very long time. Now we're seeing hundreds of other pieces of data coming into the financial markets from the real economy. Why is that happening? Well, it's not just that it's people are thinking it's a good idea, it's regulated. It's becoming more and more regulated. So the regulators are mandating reporting for large companies and for the financial sector itself, and particularly with the banks. And when you look at this ecosystem, If anyone actually has a good understanding of the entire greenhouse gas reporting ecosystem, hats off. It's incredibly complex. There's always something new coming to market. But at one level, we could look at this as there's a top-down mandate coming from governments around the world, informed by the climate science and the IPCC, being turned into standards and frameworks for disclosure and reporting, and whether that's carbon disclosure projects or the work of the IFRS and ISSB. Again, acronym soup here, but the International Sustainability Standards Board is working towards global standards for sustainability reporting. But they're all quite high level, and some of them are incredibly complex and involved. And when most of the reporting standards also then point to particular protocols like the Greenhouse Gas Protocol for the actual assessment, and those are then used by carbon accounting tools. Those carbon accounting tools need to take the assessment methods and models and real economy data, so the consumption data, ultimately turn that into reports, feed those reports into auditors, feed those reports into the markets. But to quote one of the audit firms that I was speaking to recently, I won't name them, but they say, effectively they can assure a process has been followed, but they can't assure the data at the moment. And because of the way that the reporting frameworks are framed and how then they can be implemented, you can kind of choose what you want to report in the mix here. So it's a bit of a random number generator. And that obviously doesn't give any level of degree of trust onto the important right-hand side of this diagram, which is the ratings providers and the general markets. How do we trust the information that's being provided through this system? And we're getting to the point now where we're even seeing what's called green hushing, where people are shying away from publishing data, partly because they don't trust it or they don't have the assurance around it, so the confidence around it, partly because they're concerned about liability. And so that doesn't help us either. We need to move to a more trustworthy environment rather than shying away and going back to PDF files and forward-looking statements. So there's a mechanism here where we need to improve the data flow here, and the orange arrows, to be much more aligned with the way that we do financial reporting. There needs to be clear audit trail, it needs to be very scalable and so on. So that brings us on to Perseus. So Perseus has been created through a multi-sector, cross-sector collaboration. We've got a number of different organizations involved, from government, trade associations, academia and commercial sector, to work out how can we engender trust here in this reporting framework. And at the heart of that, the banks. The banks carry a liability at the moment. They have mandatory reporting on what's called Scope 3 financed emissions. So any form of loan, they must now report the greenhouse gas emissions around as to who they're lending to. So they now have to report effectively on all of their SME customers. So the question then is, how does a bank footprint all of their customers in a credible and trustworthy way? And that's a huge challenge. It's not just a reporting framework question, though. It's also the really tough question in here is the so what question. What difference does it make? So what we've heard from the banks is that the cost of green lending at the moment is high, and that is partly down to the absence of trustworthy data. So they have said to us that if we can get access, if the banks can get access to more credible, trustworthy data from the real economy, it'll reduce the cost of capital and reduce the cost of lending, so they can do more green lending. And so the mechanism here that we're building on the left-hand side is a collaboration to bring people together, saying, what rules do you want to use? This is not about creating a new reporting standard. It's saying, how do we create an assurable and verifiable way of doing things that are aligned with the existing reporting frameworks? But as anyone working at the front line of this knows, that can get quite varied depending on how people actually implement at the front line. So it's more about harmonization of approach on the left-hand side. How can we say, well, let's make the same reports so we can have comparability, but let's also get the data sharing here from the real economy in a way that the application vendors can actually have robust and traceable information in the mix. So here it's really about creating impact for SMEs. How can we unlock access to capital for the SMEs from the banks with better assurable data at the heart of that? So let me just unpack that a little more. Is at the moment the banks and large organizations who have mandatory reporting typically are writing to their customers and asking them to fill in a questionnaire. So you might have an SME who, let's take an example of a dairy farmer. They'll get different questionnaires for the same milk from the same cows in the same shed. And the outcome of that typically is that the dairy farmer says, I don't have the time, I don't really understand this, I don't have any money to deal with it. Actually, could you make it go away? And I don't necessarily even trust the process because I'm being asked different questions and they're giving me different answers. So we need a way of making it really trivial for the SMEs to engage here. So we're starting with the high-level buy-in. So as Charlotte mentioned there, we've got support from Minister Stewart and engagement from Innovate Finance, and engagement, in fact, at the top level from a whole range of different trade associations. So how do we go far together on this journey? So we've got the ICAW and the ILD. I co-chair alongside the British Business Bank. We've got the Federation of Small Businesses and various other trade associations. And the purpose of pulling all of these different organizations together is we see, and I've certainly been part of, I'm sure many of us have, lots of different initiatives that try and tackle this problem. And one of the ways that, one of the lessons learned from open banking was if you get the right actors in the room at the steering group level, it can take the whole market forward. So we're fortunate here, we've partnered with Bankers for Net Zero, which is the UK country chapter of the Net Zero Banking Alliance. That in itself is part of the GFAN's Race to Zero and UNEP Finance Initiative. So the UK is really taking a leading role here, where we've got international optics. There's a lot of international observers looking at how we're doing this, and we've got the constituent parts, if you like, of on the steering group here, representing all the stakeholders that we feel are relevant to this journey. So the next step of this is how do we build out this coalition of the willing. So we've got a number of founding commercial partners now that includes Sage and NatWest and HSBC. Say, how are we going to go about this? Now there is a logo on this you might not recognise, which is Data Communications Company. Smart DCC, as they're called, have all of the smart meter data in the country for domestic and SME users. There's over 1 million smart meters for SMEs in there, and that's very relevant because you can tell from the complexity of this ecosystem that trying to do anything complicated is going to be adding an exponential amount of complexity to the relationships. So we're trying to do two things with Perseus. One is to build a coalition that enables whatever decisions are made to land and be implementable and to be taken out to the membership. And one of the reasons we've got the trade associations on the steering board there is they will help lead the messaging with their own members. So there's a go far together component of this. And then the other thing, given that going far together is hard, we need to really reduce what we're trying to do. So we're starting with electricity. It's not the end point, it's the start point. And the vision here, and this is just a slide mock-up, is that if as an SME logs into their online bank, they're presented with some form of interstitial that says we'd like to automate your carbon footprinting for free. But rather than filling in any forms, we'd like you to consent to sharing your energy, your electricity data. So starting with that. So then we can validate that, and for anyone who's used open banking, it's exactly the same process. That can then, the data can then flow into the bank's carbon accounting application. Again, in this mock-up, we've picked NatWest and Sage as examples. There are many other iterations of that we expect. And what the applications can then do, the likes of Sage Earth, is take that electricity information in on a 30-minute basis from the smart meter. And that's aligned with kind of gold standards you get from the standards bodies. And they can start to baseline and benchmark and look at the SMEs profile, including their financial profile and their sector and so on, and start making recommendations. Now, those recommendations might involve, for example, install a heat pump. Now, the type of advantage here is as soon as that recommendation has been made, the bank can say, well, we could give you a preferential loan, and we've already got some of the banks saying they'll do maybe a 15 bip difference on loan instruments if they can get shareable data. But what would happen here is once the heat pump's been installed, the actual consumption data would come through the system the following day after it had been switched on. But there's a nuance to this, and the reason we're building on open banking is there's two elements to this. There's the go far together, which is co-defining the roles, bringing together these different organizations to say what do they need, both from a user needs point of perspective, from a technical perspective, from a legal perspective, from a policy perspective, and how does that fuel the whole market? So what we can't do, and what we shouldn't do, is try and build a big central database, because the data is in many, many places. There's over 150 energy retailers in the UK, and there's many hundreds of carbon calculators, and there's many dozens of banks. So it's a many-to-many relationship. So back to my kind of starting point here, it's already federated. The idea that everybody would put everything in one place is not scalable and will not work, but we've got some starting conditions here where we can say with open banking, there's at the heart of open banking is a thing called trust framework, and that trust framework is a very thin layer. It's quite a big circle on this diagram, but it's an incredibly thin layer. On the left-hand side here, we've got collaborative design of the rules of the game. And in the middle, the trust framework, all it really does is codify the rules. And then it enables organizations to sign up to those rules. So you'll see on the right-hand side here, the applications, the data sources are all verified by the trust framework. The trust framework doesn't hold any of the data. The data goes directly from the data source. In this case, again, we're starting with a smart meter. We'll add on lots of different dimensions to that over time. But it goes directly from the data source to the application, and in this case, with the consent of the end customer. So you see there that the approach we're taking, this is exactly how open banking works. If you want to share a current account statement with an accounting application, here you're just replacing that current account statement with your effectively energy statement or smart meter data and so on. And because the organizations are verified, the process itself can be verified by the auditors, but so can the data. And so we're working with the consultants in the audit community to say, how are we going to define what assurance and verification means in this process? Because once the application vendor has produced the carbon reports and sent that back up the chain into a bank or an insurance company or another type of financial services organization, that can also be verifiable. And that can also, that provenance can be chained straight away through to the regulators as well. But at the heart of this, the bit that we're building in the middle of it with Perseus is this trust framework. And just to summarize what that means, we're trying to arrive at common rules. How do you create cohesion across the market based on existing standards? There's not a creation of new standards here. I have to emphasize that. The outcome is interoperability at national scale. So how do you get every bank, every energy company doing it the same way? To do that, it needs to be legal. It has to have the data rights addressed, the liability addressed, and modes of redress addressed. And that's one of the reasons why we have government involved, is their questions are twofold. One is, how do we protect SMEs from misuse of this information? On the flip side, if this starts to scale, how do we create incentives? For example, could be tax incentives around this become possible in a way that they aren't at the moment. But you need to do this within an assured and secure framework with the consent of the SME. You need to take the SME on the journey, and it needs to be universal. Again, so all of these things point at why we as an organisation work as a non-profit, because we have to sit separately to the rest of the market. So just in closing, I've got one call to action, which when you're thinking about data is to connect, don't collect all of it. So with that, I will stop. Thank you, Charlotte.
Thank you very much, Gavin. That was really impressive. You've got an impressive range of partners there, and definitely some fascinating statistics as well. Moving on to audience questions now. So Dan Feeney has said that data silos and IP preservation seem to hamper data sharing, especially as open banking tries to expand horizontally across finance. How can we square the entrenched battle amongst identity, security, and privacy? And is a trust framework enough to change this mindset and behaviour?
That's a great question, and I think just reflecting on the success of open banking, I think one of the reasons open banking has been successful is got, again, nothing to do with technology. I think when I look at what's worked in data sharing schemes around the world, open banking has been one of the most successful. It still has lots of issues, but it's been one of the most successful because what it does is it creates a legal basis for sharing. And so you can have the same information shared in different ways with different rules. And I think when we look at data, you can take electricity consumption information. Thousands of organizations want access to that for different uses. So you can't create really a top-down set of rules that covers all use cases. You have to wade into it and say, well, what's the legal basis for sharing? And a critical component of that is modes of redress and liability transfer. So ultimately, one of the ways I think about open banking success is it's a framework for data sharing where everybody can sue each other. And that's an incredibly important market dynamic, because once you've got those frameworks in place, it means people can, particularly the legal and compliance side, say that we have a basis to go ahead with this in a way that has the right risks and control mechanisms addressed within the framework. So there isn't a perfect answer to that, but I'd say that in terms of the effort to reward balance here, at one level, open banking is incredibly straightforward. On another level, it's incredibly complex because it tries to bring all of these different actors together. And I think that what I've observed as well is that there is no technical magic bullet for this. None of what we're doing, for example, uses a blockchain or a distributed ledger technology. I just don't see it as relevant to what we're doing. And actually, it has quite a high cost of implementation because there's technical friction. Not that any technology is particularly hard to deploy, but anyone who's running a large organization knows that any implementation of any technology has a massive cost to it. And so at the heart of things like open banking, and over the last 2-3 years, we've built open energy under Icebreaker One as well, is just a mandate to say have an open API. That exposes the data to the market. And then the hard bit is say, are you allowed to use it, and who's allowed to sue each other, and who's got permission and who doesn't. And so the trust framework approach enables market participants to sign up to a set of collective goals. So hopefully that gives you some sense of the direction of travel. Maybe one other important thing I can touch on here is at the moment we've got the data bill going through Parliament. There's a section in there that effectively indicates do open banking across the rest of the economy. And there's a smart data council that has been created that brings together half a dozen different government departments and Ofgem and Ofcom and a bunch of others, and a few non-profits, including Icebreaker One. And our role there, our mandate, is to apply the principles of open banking across the economy. And there'll be lots of challenges there, and there, again, from my perspective, none of them are technical. They're mostly all political with a lowercase p, about how do we get everybody to go together. And Perseus, for me, is a great example of this because it's mission-led. And if I was to put one thing at the top of the list in any collaborative development, is if you've got a very clear and narrow use case that everyone can align around and see the benefit of, then you can make progress, because everyone can see what's in it for them. And from a legal point of view, you can put the controls and limit liability around that use case.
Thank you, that was very comprehensive. Moving on to Gabby's question now. She said, is Perseus already live, or is this a pilot stage? And what are the first operational experiences? For example, response rate, user feedback, success rate?
Yeah, we're very, very early on the journey. So we launched the initiative at Parliament, I think 2 months ago. So we've been moving incredibly quickly this year. The ambition is to build a demonstrator by COP this year, so that's in December, which is incredibly quick from everybody's perspective, including ours. But it comes back to the start of my talk, the time for theory is over. We've just got to get on and act. So a lot of the lessons learned we're bringing to this is to say, look, we have many thousands of unknowns. The way that we're tackling that is we've created, obviously, the top level steering group. We've also created 5 advisory groups, which cover the user needs, the technical needs, legal and data rights, communications, and policy. And those advisory groups are populated with the users, so the banks, the carbon accounting applications, SMEs themselves, bits of government, and so on. So the practitioners are co-designing what they need, and our role as a non-profit in the middle of that is to enable people to connect and drive the whole initiative forward. So we're the catalyst in that, to say, as and when we hit blockers, how do we unblock them? Because typically that's nobody's job. That has to sit outside any one organization. So the combination here, the architecture of the initiative is designed to try and break through any blockers. Because if there's something that the advisory groups hit, we can escalate that to the steering group, and somebody within that steering group can have an opinion that helps take it forward. So the objective for this year is mostly around design and the creation of a demonstrator. Next year, we'll have a much more detailed plan about how this can get to market. But we're strongly encouraging any organization who wants to get involved now just to get on the train and help us co-design this. This has to be a collaborative initiative, and so the more voices in those advisory groups and around the initiative, the better.
Thank you. I'm glad you're sticking to your motto there. And would you be happy for members of the audience to contact you if they want to get involved in
some?
Yes,
absolutely.
Great. We'll share Gavin's contact details in the chat box and on the webpage afterwards. I think now that we've listened to the presentation, I think we might have a poll question ready to see what your thoughts are on this. Is that available to load, Sasha? Here we go. So is the finance, after listening to this presentation, do you think the finance sector is moving fast enough in terms of solving the climate emergency? Yes, must try harder, or no? Just leave that up for a few seconds longer. You may have had a different view at the start of this presentation. Hopefully this has encouraged a more positive answer. Okay. Right, let's see what everyone thinks. Okay, so we've got 25% say yes, 33% say must try harder, and 42% say no. It's definitely more positive than I thought it would have been.
Yeah, me too, actually.
Yeah.
One of the challenges, I think, in all of this is the link between capital deployment and risk. It still, in my view, has a very long way to go, and obviously it's core to what we're trying to address in the mix here. I think one of the challenges, if you look at the number of questions in a lot of these top-down reporting frameworks, we know that most organizations are struggling to really understand what they need to do, what the potential positive outcomes could be from all of that, what the potential negatives might be, but it's just highly complex. And most highly complex things lead to inertia, just because people need time to work it through. So one of the things we're trying to do here is take a bottom-up approach and say, what one piece of information would move the needle on your lending behavior? And how does that then link into the ratings agencies and so on? With a parallel program, we work with another group called the Future of Sustainable Data Alliance, or FOSDA, whose members includes LSEG and Moody's, S&P, Bloomberg, and so on. And so we're also asking the question there, what is it that they need from a ratings perspective to really inform material ratings? And there's a study from MIT that came out, I think, last year that looked at the ESG ratings for individual companies across the different ratings agencies, and there was a substantial spread. So I think there's many challenges in here, and one of them is, you know, as an investor, how do you know that you are going to see the outcome, the environmental outcome, not just the financial outcome from the investments you're making? And I think from our point of view, one of the ways that that could be instrumented is to create mandates for data provision as part of the investment. You know, so whether that's through procurement, whether it's through the investment process as a condition to say you've got to supply this information. You can benchmark before a project starts. Ad sensors, there are plenty of, you know, hundreds of commercial vendors out there that can instrument developments and then monitor it on a continuous basis. The cost of doing that is orders of magnitude less than it was even 5-10 years ago. So we're in this very different environment now where there's a lot of potential, and equally a lot of people don't want to measure things because it's going to tell them things they don't want to know. So I think it's a lot of tensions in the mix there, but yeah, I was very encouraged to see so many people saying either yes or must try harder, but I would agree with a lot of the no's. We've got a long way to go yet.
Yeah, I was surprised there were yeses in there, in fact. Uncle Gaviaro has asked, I think you've sort of touched on most of this already, but he's asked about the implementation timeframe and major milestones. Mm-hmm.
Yeah, so our first major milestone was to launch, which was 2 months ago. And the next one is this demonstrator for the end of this year. COP is in December. In Q4 of this year, we're going to be creating the follow-on plan. As you can tell, this is very much an iterative development project. We haven't set out and said, you know, here's the 5-year detailed plan. Our reasonable expectation, I think, is we've got enough momentum now in the system that we can realistically say that there could be something in the market next year. The questions linked to that are, one, obviously we're starting with electricity, and the second, we've got that information flow through to the carbon accounting firms and the banks. The second, that a bank is making a lending decision based on that information flow. I think it will just prove out the model, and everyone will get on that particular train. The questions then are, what next? Is it a question of saying, well, let's do more energy types? Is it looking at water or transport and so on? Is it looking upstream from SMEs into enterprises? Is it looking downstream into domestic? Or is it looking beyond the UK? You've seen on the slides there, we've got the International Chambers of Commerce and the OECD and the Institutional Investors Group on Climate Change as observers to this process. If this is successful, then we want to see it expand along multiple dimensions. And it could be, you know, one of those potential expansion vectors is going from banking into insurance or asset management. So that's maybe a long-winded way of saying one of the big challenges here in going far together is containment. So our main focus is, can we do one thing well to begin with, build the processes and structures and the rails, if you like, for decision making, and then use that and say, how quickly can organizations actually move? I think when we look back at open banking, it was lightning speed. Once we actually got the go-ahead from that, in that case it was Treasury and backing from the Chancellor, we wrote the initial standard in 3 months. It was then regulated within 12 months. And then it took 3 or 4 years to get to market because it had never been done before, so everything had to be created from scratch. My hope in all of this, and this is what we will flash out in the next 6-12 months, is that all of the infrastructure here in terms of, well, we've done it before with banking, we've done it with energy, we've got a clear and present need and a sense of urgency, is the question then will be how quickly can the organizations themselves move in terms of their own decision-making processes. And there we're seeing a usual spectrum of leaders and followers, but some of the leaders I think will get there very quickly.
Well, you've certainly built a lot of momentum very quickly, which is very encouraging to see. So let's hope that continues. I think we might have to get you back in a year's time to update us on how things are going.
Absolutely.
Comments come in thanking you for a really interesting talk, which brings me to the end of the webinar this morning. So thank you again, Gavin, for sharing your time and work with us. That was really nice to have a really positive, encouraging conversation. And also thank you to our sponsors for making these webinars possible. And of course, to you, our audience, for logging in and contributing to the discussion today. Don't forget to check out the forthcoming events page on our website. We've got a lot more webinars coming up before the end of the month. We've got financing for steel sector decarbonisation, which is quite relevant to today on Wednesday. And next week we've got Ford and the UK government and Supreme Court at odds, which should prove interesting. And then on Thursday the 31st, the use of DLT in capital markets. Thank you very much, everyone. I hope to see you in the near future at another webinar. And thanks again, Gavin. Goodbye.
Thank you.